Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we looked at the morning and evening star candlestick patterns. In today's lesson we're going to finish up our series on candlesticks with a look at the inverted hammer and the shooting star. So let's get started.
As its name implies, the inverted hammer looks like an upside-down version of the hammer pattern, which we learned about several lessons ago. Like the hammer pattern, the inverted hammer is comprised of one candle, and when found in a downtrend is considered a potential reversal pattern. The pattern is made up of a candle with a small lower body and a long upper wick, which is at least twice the size of the body of the candlestick. The body of the candle should be at the low end of the trading range, and that there should be little or no lower wick in the candle. What the pattern is basically telling us is that although sellers ended up being able to drive the prices back down, at some point during the trading period, buyers were able to drive prices up. And the buying pressure during the trading period that this candle represents is of concern when looking at that in a downtrend. The fact that there was so much buying pressure that drove up and made that top wick, that even though sellers were able to push it back down, this is a sort of a warning sign that a potential reversal in the trend may be coming. So here's what it would look like trading it on a chart. You want to see a downtrend in place as we have here, and then we have the inverted hammer followed by higher trading. Like all one candlestick patterns that we've looked at, you want to see a confirmation on the next period of trading, and we do have that here as the next period of trading. The market moved higher during that period, and like most of the patterns that we've discussed, or most of the things that we've discussed, traders like to see a increase in volume on the day the candle was formed that forms the inverted hammer. And the longer the wick is that forms the hammer, the greater the potential and the larger that reversal is thought to potentially be. And you can see in this particular case, we do have the increase in volume, and then we do have the reversal in trend that does happen there. The shooting star is exactly the same thing as an inverted hammer, but instead of being found in a downtrend, it's found in an uptrend and thus has different implications. Like the inverted hammer, it's made up of one candle with a small lower body, little or no lower wick, and a long upper wick that is at least 2 times the size of the lower body. The long upper wick of the pattern indicates that at some point buyers were able to drive prices up during the trading period, and the short body indicates that sellers were able to drive prices down to close near the bottom of the range. Now, since this pattern is found in an uptrend, this time the selling pressure, which is not going to be expected in a downtrend, where it was expected where it's not expected in the uptrend. In this case, where it was expected in the downtrend, is going to call the trend into question. So that's going to be sort of the alarm sign that gets traders looking for a possible reversal in the trend here. As far as trading the shooting star goes, you're going to want to have an uptrend in place. This is a fairly small one, but you still do have several bars of up trading there, enough to form a small uptrend there. You do have the shooting star there. You can see it followed by the down trading. You've got an increase in volume there on the day that forms a star, as well as the following day that confirms the pattern. And then we do have a sell-off that occurs after that. For those of you who've been following my lessons, you should also see another pattern that's in place that's confirming that this might be a potential good trade, and that is the double top. Okay. The purpose of the InformedTrades.com community is to hopefully form a website where people can go and join a community where they can learn with other traders without all the hype that is associated or normally associated with a lot of trading education. So if you haven't done so already, I encourage you not only to visit the InformedTrades.com site, but every page on the site has a comment section. So I encourage you to actively share your knowledge in areas where you're knowledgeable, and to ask questions in areas where you might need to brush up. Okay, that's our lesson for today. In our next lesson, we're going to start a new series on money management. So this one wraps up our our series on candlestick charts. As always, if you have any questions or comments, please feel free to leave them in the comment section below or visit the Ask a Question section of InformedTrades.com. And have a great day.